Profitable trading is not just about having the best stock picks. It's also about being in harmony with the general market, since most stocks will follow its direction. We hope you find this video helpful. This is Mark Gordon with your weekly market update for the week beginning May the 11th, 2009. And looking at a weekly chart of the NASDAQ, we see 9 straight up weeks, which is really an unbelievable move, 40% up off the bottom. But we are seeing a little bit of stalling action here along the 40-week moving average. You can see here that the volume has been rising with our biggest week of volume this last week here. But you'll notice here that the range of the week was a bit smaller, closing about the middle of the range and having a bit of trouble getting past this 40-week moving average. Also see this blue line, this blue dotted line here. This is the relative strength line. This is the relative strength of the NASDAQ compared to the S&P 500. And you can see here that it was leading ever since late 2008, and now it's just cratered, and that means that the S&P is catching up to the NASDAQ. So the NASDAQ is giving up its leadership, and the NASDAQ is usually comprised of your faster moving growth stocks. So this might be a sign that the recent rally is going to take a little pause or maybe even a correction. Looking now at a daily chart of the NASDAQ, we can see that we got up to this 200-day moving average or the 40-week moving average on Monday, and we've been dancing around it all week long. And on Thursday we had a wide range day closing towards the bottom of the range on the biggest volume, this red spike here, of the whole entire rally since we broke out here in early March and confirmed on March the 12th. So that's another ominous sign that the NASDAQ may be pausing here. You can also see the daily relative strength against the S&P 500 has fallen. Now, of course, nothing's written in stone. The markets can often behave irrationally or do things you don't expect them to do, but that's just something worth noting. Now, if we do get a pullback, we might get support here at this red line here, which is racing up very quickly. This is the 20-day moving average. A lot of traders look at that and will buy shares as the prices touch that line. If that fails, our next stop is going to be down here at the 50-day moving average, another place of institutional big money support here, racing up as well. And if the 50 fails, we could get support at the 100-day line, which is this green dotted line here. So lots of support down in this area if things come apart. Now, by watching leading stocks, you can get an indicator of how the markets are acting or going to act in the near future. And Netflix was a clear leader, having a great run here since the start of 2009 and staying well above this blue line, which is the 50-day moving average, and running up with heavy volume breakouts. Here was a breakout here well before the market started acting right on huge volume. Netflix cleared this consolidation here on tremendous volume and then ran up, pulled back a little bit, and then broke out again and ran up, got support each time well above the 50-day moving average as it ran up. And you can see here that it topped out here at $50.24. Hitting that on some pretty good volume here, and then it started to sell off. Came back here, challenged the 50-day moving average, got support, got a little bounce up here, but you'll see some heavy institutional selling coming here with these big red spikes, and then ran out of gas at 47.63, found a little bit of support here at the 20, and then broke down. And it's very important to see how a stock acts at the 50-day moving average, and Netflix unfortunately did not pass the test. It sliced through the 50-day moving average on very heavy volume and finally got support down here at the 100-day moving average on some good volume. But nonetheless, the NASDAQ did break its 50-day on big volume, lost support of it. So institutions are not supporting Netflix right now. It possibly could go back, set up in a new base, and break out again. But it's a great indicator of how the general market is acting when you see its leaders do this type of action. Another powerful leader that's broken down is Allegiant Travel. And the stock formed a cup with a handle here and broke out here right about the same time the general market broke out, and ran up to a high of 57.52, pulled back, got support well above the 50-day moving average here in late April, rallied back up, did not make a new high here, and then fell down and collapsed through the 50-day moving average here on tremendous volume. Very, very heavy as compared to previous volume. It's actually the heaviest volume we've seen in a long time, and certainly well ahead of the volume on the breakout here. So another bad sign here. And here's one of my favorite stocks, Long Top Financial. I've done a video essay on this stock before. They're makers of banking software that pretty much do everything a bank needs, from ATM machines to international transactions and just about everything for Chinese banks. Great company, huge earnings, broke out of a weird shaped cup here at 1950, back here as soon as the market broke out, and has run up ever since, and almost a 50% run up off of this breakout here. And has gotten support when it pulled back, tested the 50-day moving average. This was a great sign here because it found support immediately, bounced right up off of it, and then made a new high. But in the last 3 days, long top has pulled back in heavy volume, with Friday's volume being super heavy, and a huge down day here, down almost 13% in 1 day, slicing right through its 20. It's yet to be seen if we can get support here at the 50-day moving average, but this is another stock that's acting funny. Now, I wouldn't necessarily look at a correction or a pause in the markets as a bad thing. We have a lot of great stocks, like here's Vistaprint, which is one of my favorite stocks, and I think it's number 3 or 4 in the IBD 100 this week. And this is a great stock with great earnings and all that, but it has a 70% deep base. This stock has corrected 70% from the high here to the low, and now has come back up and built the right side of a nice cup here. But that's way too deep of a cup to trade. And if we get some sideways action or possibly a correction here, Vistaprint could form another base in what they call a base on base formation, which could set up and be a launch pad for a nice move here. So I think what I'm trying to say is look at a correction as something healthy in this market after this really horrendous bear market, and I'd actually welcome a well mannered correction this summer. Thanks for watching, and I hope you found this video helpful. As you may know, making big money in stocks is all about being aboard the handful of true market leaders during a strong bull market. At GoldenTicker.com, we concentrate on locating only the strongest stocks and give you proper buy and sell points based upon our proven trading models. We also monitor the health of the general market to let you know when conditions are favorable. I'd like to invite you to begin your free 2-week trial at GoldenTicker.com now and get full access to all our stock picks, advanced lessons, and more.